You may have heard that Japan is in the middle of a major currency crisis. The yen has been dropping in value against other currencies, and some experts are predicting that it could get worse. Hello, and welcome back to our channel, Business Ville. In this video, we're going to talk about the current currency crisis in Japan and what it could mean for the rest of the world. But before we begin, make sure you subscribe to our channel and hit that bell icon to receive notifications whenever we post a new video. Without further ado, let's begin. The Japanese yen lost 1/5 of its value versus the dollar between September 2021 and May 2022. This is a significant gap, especially given that we are discussing one of the most significant currencies in the world. In fact, it is something that has raised alarm bells across Japan. The dollar's value surpassed 130 yen for the first time in 20 years. That's not all, either. The value of the Japanese currency has decreased by 40% since the yen hit a record high against the dollar in mid-2012. And we are asking ourselves, why is the value of the yen falling? Why does it appear to bother so many analysts, including the Japanese government, so much? What potential effects on the markets could it have? Well, let's look at it now. Why is this happening? The disparity between Japanese and US interest rates is what has caused the yen to decline. In an effort to combat the rising cost of living, the US Federal Reserve has aggressively increased its key interest rate from 0.25% to 3.25% since March. A currency typically becomes more appealing to investors when its interest rates are higher. As a result, there is a decline in demand for currencies from nations with lower interest rates. Japan had not supported the yen by intervening in the world currency market in nearly 25 years. However, as the currency declined in September, the government intervened and spent $21 billion. It was beneficial for a brief period of time, but soon the currency fell once more, crossing 150 yen to the dollar. This allegedly led to a further intervention, this time involving an estimated $37 billion. The hidden face of devaluation. Japan had an average monthly trade deficit of $1.2 billion in 2021. In fact, if we look at the data, we can see that the external balance has stopped being advantageous since 2012, despite the fact that the yen has lost 40% of its value. Additionally, Japan exports make up about 17.5% of its GDP, which is higher than the United States percentage, but much lower than that of nations like Canada or the United Kingdom, which export about a quarter of their GDP, let alone Germany, where exports make up 47% of GDP, or nearly 3 times Japan's share. In other words, despite the fact that we all associate Japan's economy with its exports to other countries, the data show that the Japanese economy does not appear to be particularly focused on the overseas market. In contrast, it is an economy that is heavily reliant on the importation of various types of raw resources. The fact that imports are expanding far faster than exports and that the yen is depreciating further supports the notion that a severe economic shock is imminent. If things continue in this direction, the purchasing power of the Japanese people could decline significantly. In fact, a previous Reuters poll revealed just how Japanese businesses are starting to genuinely worry that the depreciating yen will unnecessarily impair capital investment and consumption. Even worse, the global economic downturn, notably the effects of China's zero-COVID policy, may cause a decline in Japanese exports. Because China is the principal destination for Japanese exports, it is true. Look into it. The yen's value would be further depressed if this slowdown were to materialize, since it would leave a sizable gap in the foreign sector of the Japanese economy, and with it, the power of Japanese consumers' wallets. Also keep in mind that this may not be the sole effect. A devaluation war between Asia's biggest exporters may result from the decline of the yen, which may encourage other competitive economies in the area to do the same. After all, when one nation's currency is devalued, another nation's ability to compete is temporarily harmed. Because the yen is currently less expensive than the won, purchasing items from Japan becomes more affordable than from, say, South Korea. What can Japan do then? The economy of the land of the rising sun is also plagued by significant issues. It is typically not a good long-term strategy for a country to close its borders to foreign direct investment while attempting to become more competitive by weakening its currency. Even while traders claimed they observed indications of additional intervention earlier in the week of October, the Japanese government has so far declined to confirm it intervened once again. Experts have cautioned that these efforts to support the yen will always only have a temporary impact. Asuisa Kakibara, a former senior official in Japan's finance ministry, explained the move this way. It is to demonstrate the position of the Japanese government that it doesn't want any further depreciation of the Japanese currency. Do you believe that in order to compete, governments and central banks should devalue their currencies? What do you think will become of Japan's economic strategy? Let us know in the comments below. Make sure you give the video a big thumbs up and share it with your friends. Stay tuned for more information on the happenings around the world.